The average American household pays over $300 a year in bank fees. But here's the part that rarely gets discussed. Those fees are not distributed evenly. The majority of them are paid by people with the lowest account balances. In other words, the less money you have, the more you pay to access your own money. That sounds backwards, but when you look at how modern retail banking actually generates profit, it starts to make uncomfortable sense. Welcome to Mr. DJ Finance. Today, we are breaking down why banks often end up penalizing the very customers who can least afford it, and how fee structures quietly shift costs toward lower-income users. Let us get into it. Most people assume banks make their money primarily from loans and interest spreads, and that is true at a macro level. But at the retail level, a significant portion of revenue comes from what is called non-interest income. That includes overdraft fees, monthly maintenance charges, ATM fees, minimum balance penalties, and late payment fees. In 2019 alone, U.S. banks collected over $11 billion in overdraft fees, according to FDIC data. What is critical is not just the size of that number, but who pays it. Studies consistently show that a small percentage of customers, often those living paycheck to paycheck, account for the majority of overdraft revenue. Here is where the system becomes structurally uneven. If you maintain a high balance, most banks waive monthly fees, refund ATM charges, and offer premium accounts. If your balance drops below a certain threshold, you are charged for simply keeping the account open. So the customer with $10,000 in the bank pays nothing, while the customer with $200 may pay $15 a month just to avoid account closure. That is effectively a regressive pricing model. But here is where it gets more interesting. Banks also reorder transactions from largest to smallest in some cases, which increases the likelihood of multiple overdraft charges from a single low-balance event. So a customer who is short by $20 might not get hit with one fee, but 3 or 4. At $35 per overdraft, that can turn a small mistake into over $100 in penalties. And this is not a rare scenario. According to Consumer Financial Protection Bureau research, frequent overdrafters can pay over $300 per year in fees alone.